Gold and silver are once again going through the roof now that it's a new week. Silver is almost $44 an ounce. It's not a big surprise that this happened, since this is the worst year for the US dollar in decades. This is what we're going to talk about, and Morgan Stanley now says that people should have gold in their investments. This is big. It was the worst day for Wall Street since 1987. We're down 43% now. This could be the worst slump in decades. With gold and silver IRAs, you can protect your income. Click on IRA at sdbullion.com to learn more. Thanks for watching. I really do appreciate it. Look at how much silver costs at $43.95. The price has gone up by 72 cents, or 1.5% since yesterday. We could reach $44 silver right now, while I'm making this movie. Gold is also very high today. It's worth $3,738 an ounce right now. Gold has reached a new all-time high. It's unknown territory for us. Gold is up $46 today, or 1.25%. In other words, silver is rising more quickly than gold. The gold to silver ratio is going down, but it is still above 80, so we can see that. At this point, I do think you should buy silver instead of gold. But let us look at the dollar. Things are getting worse for the dollar today, but it is still higher than its 52-week low. It's not quite at the bottom yet, but it's getting there quickly. In case you didn't know, the USDX is based on 6 other currencies to figure out how much the dollar is worth. The euro, the yen, the pound sterling, the Canadian dollar, the Swedish krona, and the Swiss franc are those. I looked at how much silver cost in all of these other currencies, and what I found shocked me. As hard as it may seem, silver is at an all-time high in 4 of the other 6 currencies. These are the Swedish krona, the Canadian dollar, the pound sterling, and the euro. Silver is at its highest level in 14 years in the Swiss franc. Japan's yen has the most silver it has had in 45 years. I believe it is useful to check the performance of silver and other money used in different parts of the world. No matter where you go, it works really well. It's not a surprise that silver prices keep going up, since this is the worst year for the US dollar in several decades. The Financial Times put out this chart. It shows how much the US dollar measure has changed each year until September 18th. That means the dollar is going to be wiped out this year. In fact, this piece says that the dollar had the worst first half in over 50 years. When was the last time the dollar had a worse first half of the year? It was 1973. Don't forget, that was only a few years after Nixon took the dollar off the gold standard. This year, the dollar hasn't done very well, and it doesn't look like it will be able to improve next year either. This piece talks about how interest rates at the national level affect the value of currencies and exchange rates. And they say that in general, higher interest rates make a country's currency worth more. On the other hand, lower interest rates make it less appealing for foreign investors and lower the value of the currency. This means that the dollar is likely to keep going down while valuable metals continue to rise. This is because the Federal Reserve recently cut rates, and it looks like they'll do more rate cuts soon. Perhaps this is why the Chief Information Officer, CIO, of Morgan Stanley prefers a 60-20-20 portfolio strategy with gold as an inflation hedge over the more common 60-40 strategy. A lot of you have heard of the 60-40 rule. Place 60% of your money in stocks and 40% in bonds. The 60-20-20 plan, on the other hand, says that you should only put 20% of your money in bonds and the other 20% should be in gold. There's a lot of talk in the investment world about a 60-20-20 portfolio plan with gold as a hedge. This is because Morgan Stanley's CIO called it best practice. The blue line at the bottom of this picture can be seen. The benchmark is shown in pink, and that's the 60-40 approach. It's slowly going up. Since that's the S&P 500, you might think it's better to just buy stocks. But the downsides of that approach are a problem. You could lose up to 25% in the 60-40, but up to 55% in the S&P 500. It's obviously much riskier to just invest in stocks. But if we look at the annualized return, we see that the 60-40 will give you 5.63%, and the S&P 500 will give you 10.85%. You should definitely weigh your risks, but let's look at the 60-20-20. The 60-20-20, shown by the blue line, is doing much better than the 60-40. Sometimes it's even doing better than the S&P 500, though it is a little riskier than the 60-40. We can see that the biggest loss was 33.8%, which is obviously more than 25%. But the annualized return was 9.35%, which makes it look like this is what everyone should have been doing the whole time. To be honest, I don't know how many people will switch to the 60-20-20 strategy, but I think a lot more people will be investing in gold now that Morgan Stanley's CIO has suggested it, which could have an effect on the price. We know that central banks buy a lot of gold, but what about regular people? If everyone else starts to buy gold too, it could really take off from here. Gold is already at an all-time high, and it keeps going up every week. Take a look at this chart for 1 year. Gold was worth $2,600 a year ago. It costs more than $3,700 now. We're almost at $3,750. It wouldn't surprise me if we hit that today. Also, since we're talking about metals going up, I said at the beginning of the video that silver might hit $44 today while I'm shooting. Sure enough, silver is now at $44.01. So there you have it. The price of silver is going up. This is really strange. There was a time when I thought silver would go down on Monday after going up on Friday. But now, every Monday, when the markets open, silver continues to rise, and it's only $6 away from a new all-time high in silver. It's already up about $15 so far this year, so $6 more shouldn't be too hard to reach before silver hits a new all-time high. Once it does, it will be a race to the finish line. You should get in before everyone else does, because I think they will wake up and start buying. Of course, I have no idea what will happen. Check it out for yourself, but Morgan Stanley says people should buy gold and keep it in their portfolios, so I don't know. What do you guys think? Please let me know in the area below. Thanks for watching, and I'll see you all in the next one. The Silver Dragons are out, typed up by turboscribe.ai. To get rid of this message, go to GONE Unlimited.